Good morning, traders. Welcome to this video on the euro versus the dollar and the pound versus the dollar. My name is Chris from Elite Currency. All right, so the euro dollar, we got the bullish breakout as I expected. On Wednesday, I was looking at a 61.8 fib from this swing, this high to this low, and was looking at the golden ratio here and a triple bottom and indicating that a breakout is likely, a bounce, and then a breakout is likely. And that's what we got. We did see price push through the 20 EMA, these tops, and also this trend line for that push up. The push up didn't go as far as I expected, though. I was looking for a push up to the minus 272 or the minus 61.8 target as a ABC pattern. The failure for price to break through the previous top indicates to me that this pattern is not finished. The wave B is probably still ongoing. And I think what happened is that we're seeing a wave B complete at the deeper fib, the 78.6 fib rather than the 61.8 fib. You see how nicely these fibs are being respected. 50 fib, 61, and now the 78.6 fib as well. And I think what we're seeing now is an expanded A, B, C within that blue B. So the pattern is still valid, I believe, the ABC pattern. Or what could also happen is an A, B, C, D, E as well, by the way. If we see a lower high followed by a higher low and then a lower high again. So one of these two is likely. I still think, therefore, that price is going to find support and bounce, but it actually already has done that. But what I mean is that it will make a bigger breakout above the 20 EMA and make an up move to test at least the resistance and resistance trend line like that. If not, break it. If it breaks, then it's an ABC zigzag. If it bounces, then it could be that ABCD triangle like this: A, B, C, D, E. Within C, if it is a triangle, there could be 3 waves up, and then another 3 waves down, and 3 waves up. In fact, typically wave C is the most complex and lengthiest wave of the ABCDE triangle. So be aware, it could look, complicated, and it might, seem lengthy, and you might be confused because of that. But that's usual for wave C. So how do you know in real time that this is basically not the wave C, but rather a B of a bigger wave B? That's when price fails to break the top. So when it's ongoing momentum here, it still looks like that zigzag. What we really wanted to see was a bull flag pattern. So what you can do is place a fib rather than from here to here. Hang on, let me take everything off. So what you want to do is then keep an eye on this fib like that. Because if this is a wave 1, 2, like this, if this is a wave 1, hang on folks, sorry, wave 1, 2, and this is a 3, and this is a 4, and then up for 5 within that wave C. So then you can put a fib on this swing like that. And basically what you're looking for is a bull flag pattern that, I don't know, something like 13 candles going like this, respecting the 23 or the 38.2 fib and moving up. So once you see strong momentum like that, or maybe even more importantly, this bearish engulfing twin that is basically closing below the 38.2 fib, that specifically after this momentum and such a strong candle, that's within a couple of candles. We're looking at 1, 2, 3, 7 candles, such a strong push down and a bearish engulfing twins. That's the moment where alarm bells are ringing, because in that case you don't have a break of this top. There's a strong reaction to the top, and in that case the wave outlook is changing. And in that case, when you see that kind of price action, it's good to protect the profits. Any longs setups from here or here or here upon the breakout, or even here, should be swiftly moved to break even, if not lock in the profit by trail stopping the 20-EMA low, for instance, or these wicks or this wick, and protecting whatever profit that is, depending on your entry. Of course, that could be nothing, break even, or some, a little bit, or even more, or a decent win if anyone entered earlier. That's my 2 cents, at least, in how I read this price action. What you want to see is an immediate break or some flag and a continuation. That didn't happen. Therefore, alarm bells, and indeed a sturdy fall after that, as you can see, pullback and continuation to finish that bearish wave C. We didn't have any video at the time to explain that this could be wave C, but that's what I'm thinking now. Now, What if? I always discuss what if, of course. This is my expectations at this moment, but the confirmation is if there's a candlestick break, close, I should say, above, I would look for a candle close above this 119.06 level. That should confirm it. In fact, we already had a break above the 20 EMA. So from that point of view, it might be already looking for a break. I think I would be a little bit more cautious here and wait for the next one personally myself. But there's already some good reasons to expect a bounce. Looking at current bullish price action, it's looking already quite bullish. But what if price breaks through? So that's the confirmation. In that case, I think we're looking at an upside towards 119.75. And if it breaks that, then maybe 120.30, if not 120.80, as I discussed before. But what if price then breaks through this? Well, then there's a move down to the 88.6 fib. Let's put back the fib from here to here. And there could be a bounce at 118.50. Okay, that's a small push lower. That could be an small intraday push for 20, 30 pips. But yeah, if there's another flag and another break, then there could be just a downtrend coming, and this bottom might break. If this bottom breaks, of course, then the bullish ABC is out of the window, and we're looking again at the downtrend, very simply said. In that case, I would zoom out to 4-hour chart. And in that case, we're looking probably at a 1, 2, 3. This is all the way 4 here, and we're looking at a wave 5 down. And in that case, the wave 5 target is 117.50, the round psychological level, and WIS 8. And if we put a fib from here to here on the wave 3, we're looking also at the minus 272 target area around that 117.50, as you can see. That would be the alternative. I don't expect that, but as I said, if there's a breakthrough that support in the WIS 7, then of course my bullish scenario is invalidated. It's out of the window. I have to adjust my thoughts and analysis to what actually is going on in reality, and not what I suspect is the current patterns are valid. Current patterns, to me, suggest ABC and now up as part of a bigger ABC. But nothing is 100%. So if we don't get that, then that would be the alternative in my view, the most likely alternative. Let's take a quick look at daily charts. We're looking at candle number 8. So I don't think we'll get a bullish break because the time patterns are suggesting also a bigger upside. In the weekly chart, we still have that bullish candle of 2 weeks ago. Last week was this inside candle. So I don't think that that's too relevant at this moment. So yeah, I looking for this basically this breakout here. It actually already has a breakout continuation, actually I should say, in fact, to the upside. All right, pound USD. So Wednesday spoke about if price makes a dip that it can make an inverted head and shoulders. That's what it did. So we did get left shoulder head and right shoulder, and that was indeed the support area where price made the bounce, and it is made the rally up. But it again also didn't break the previous top. So although it reached close to the first target we mentioned at 140, it actually hit 140. So target-wise, it did hit the first target. Pattern-wise, it didn't make a higher high though. So therefore, although one could consider that maybe to be completed, I don't. I think it's probably like the euro-dollar in ABC pattern here, flat, ABC flat probably. Or let me double check if that's a flat. Probably is. Looks like a 5-wave pattern here finished. So this looks like an ABC A, ABC B, and a 5-wave for C, like this, A, B, C. We had a 5-wave up here for A, so now expecting also a blue C. Let's put that in perspective on the 4-hour chart. So we're looking, I think, at A, B, and now up 4-wave C. And that could take place, I think, maybe this week. We already see a reaction here at the previous bottom at the deep fibs again. Now in this case we had 5 waves completed probably here, so this is red A. So the ABC up that I expect could be red B, and then I expect again a red C. So up followed by down basically for that ABC pattern. Let's see on the hourly chart here too, a break above the 21 EMA probably would confirm the continuation up. Alternative scenario, just like the euro dollar, could be a ABCD pattern as well. A, B, C, D, and this might be E. So if it is upside, it doesn't have to be part of the wave C blue, but it could also be red E. In both cases, though, upside is expected. So the difference would be with red E is that we expect a 3-wave up. With blue C, we expect 5-wave up. So the main difference is the wave 3. Wave 3 should go way further. So if it is a wave C, we should see a strong wave 3. Whereas if it's a red E, the third wave should be a bit muted, and it should be more a 3-wave pattern, and of course should not break this top. So that's the main difference there. That would be the triangle pattern. It could also be a triangle pattern in a different way. It could be up like this, and then an A, B, C, D, E, then a break to the upside with a bigger A and a triangle in the B, C, and then still down. So pound dollar has 3 serious versions, I think. All 3 versions, it's up first, and then we have to see how it responds to the top and whether we get an extension of the correction, in my view. Once again, invalidation happens if it breaks through this support. In that case, my bullish scenario analysis is out of the window, and we're probably looking at immediate downside towards 137.50. In that case, ABC completed, and we might be looking at a downtrend already. In that case, we had impulse, ABC, and we're looking at an immediate follow through. I don't expect that, but if price does break through support and through the support trend line, then that is probably what's going on, and I would have to adjust my my analysis. All right, I guess that's it. Hope that makes sense. If not, of course, feel free to join our webinar tomorrow and ask live questions with me. This is our weekly live webinar about elite currency, about anything you want to discuss regarding trading and Forex and automated systems. Feel free to join or use the forum, the Google form, to, if you can't join live, to ask questions beforehand, and I'll address that in the webinar, and then we upload the webinar to our YouTube channel. You can see the answers there. So feel free to reach out and communicate to us like that, of course. And above all, I guess wish you great trading, a great week ahead. And today we have also a wave analysis webinar, by the way, elite wave webinar and moving averages. And Wednesday, of course, back with this video on the euro dollar and pound dollar. Cheers. Bye-bye.